Welcome to Zen and the Art of Real Estate Investing, one of the fastest growing real estate investing podcasts in the world. What if you could learn from experienced real estate investors? Find out what got them to where they are now. Get insight into their daily habits and take these insights to inspire your own growth. Each episode, Jonathan Greene shares an in-depth look at the mindful approach to real estate investing. Jonathan is a lifelong real estate investor and the founder of Streamline, a data-driven, investor-friendly, independent real estate brokerage located in Madison, New Jersey. Whether you're looking to start from scratch, get to the next level, or just for a straightforward and honest approach to real estate investing, this is the free mentorship program you can take with you anywhere. Now, here's Jonathan.
Welcome back to another episode of Zen and the Art of Real Estate Investing. My guest today is Bob Knakal, a legend in the New York City commercial real estate world. He has been maximizing commercial property owners' sales prices in New York City since 1984. You're going to hear about the map room. Pay attention to that. I can't wait for you to hear this episode and learn about development, how Bob got started, and all things commercial in the biggest city where real estate is nuts. Let's do it. This is episode 333 of Zen and the Art of Real Estate Investing with my guest, Bob Knakal. If you don't know him, Bob is a legend of the New York City commercial real estate game. He's the chairman and CEO of BKREA, a commercial real estate capital markets brokerage in, you guessed it, New York City. Bob's stats are incredible. Around 2,350 building sales by now and over 250 development site sales. Bob, welcome to the show.
Thanks so much, Jonathan. Great to be with you today.
Yeah, I'm very excited to talk to you. Some viewers, though, may remember you from a show where you made Ryan Serhant stand on top of your incredible table. I want to know, is that really the map of all the properties in New York City?
That is a map of development sites in Manhattan.
Yeah.
Basically south of 96th Street on the east side, south of 110 on the west side. But it's a map that identifies by parcel every property that is under construction, every property that's been demolished, every property that's built to less than 25% of its maximum density per current zoning, and potential assemblage sites. So basically anything you'd want to know about the land and development market in Manhattan is on that big 24-foot long piece of paper.
Yeah, it's so incredible, though, because that, I guess people now would consider that old school, but it's really the easiest way for you to always be able and show other people a complete overview of New York City development.
Yeah, well, it's actually, Jonathan, I tell people I think it's the best marketing initiative I've ever done in my career, and I've been doing it 42 years.
Yeah.
It really is such a great representation of very, very granular market knowledge. Yeah. You walk in, you look at that map, the color coding, the Post-its for sales for the last 3 years, what's available for sale, what's under contract. And there's no way you could dispute that we know more about the land and development market in Manhattan than anyone else.
Yeah.
And it's been reflected in the success rate we've had pitching business in the Knakal map room. Historically, from my career, I've won about 26% of my pitches, but we just gave pitch number 92 in the map room. As we approach our second anniversary, we've got 90 exclusive listings. So, over a 97% win rate by pitching business in that room. And so, it really is it's a great way to tangibly represent market knowledge.
Yeah, and especially with commercial real estate, obviously, I think like a lot of people know more about residential real estate if they're not in real estate, just because it appears to be more flashy and is on more shows that people may watch. But commercial real estate is highly data driven and also, I think, way more relationship driven. Would you agree with that? You've been in it 42 years. Relationships are everything. When you pair it with data, it's almost a can't lose situation.
Yeah, well, I always say that we're not really in the real estate business. We're in the information and relationship business.
Yeah.
And the better your information is, the more proprietary it is, the easier it is to make very solid relationships. So they go hand in hand, but I agree with you. Those two things really are what drive the business.
Yeah, and having that available, the map room, that's a built-in moniker of trust that you can walk someone in, and obviously you know everything, but it's identified. And trust is really what it takes to get these large-scale commercial deals done, because a lot's riding on it for the seller and for everybody involved.
Yeah, no doubt. It's for most folks in the business, their buildings make up the majority of their net worth. So
Right?
these decisions are very, very impactful. And the more information you have, the better quality information you have, the more informed the decision making process is for your client. And when they're more informed, they can make better decisions.
Yeah, makes complete sense. Well, let's go all the way back for a second. Did you grow up thinking real estate? And if not, when did real estate come into the picture for you?
Yeah, no, not at all. I got into real estate completely by accident. I'll take you back to 1981. I'm a freshman at the Wharton School at Penn, and wanted to be the next Gordon Gekko, like every other Wharton kid, and go work on Wall Street.
Yeah.
And I was looking for a summer job that first summer between freshman and sophomore year. Wandered into a Coldwell Banker office thinking it was a bank, and they were the only ones who were hiring college kids for the summer. Took the job, loved it. Went back my next 2 summers and started with CB in Manhattan when I got out of school. And it's just been an unbelievably wonderful mistake that I made. Selling buildings for me is a job. It's also my hobby. And I feel so blessed that I stumbled into something that I truly love so much.
Yeah, I think that the most successful people in real estate, whether they're investors, brokers, whatever, we all love real estate. I still like looking at, like, if someone says, "Hey, I have a real, just a dump residential to see," I'm all up for it. And I'm sure if you say, "Hey, there's a building that's been crashed out for 25 years, someone wants to do a redevelopment," it's exciting, right?
Yeah, no doubt. No doubt.
Yeah, it never gets old. But I guess it must be even more challenging in a city like New York City, because you're dealing with obviously a lot of regulations, buildings next to each other, height restrictions. How did you get adjusted to that as you started to get to the larger scale? Because it's not usually just from beginning to large scale commercial.
Yeah, no, we started selling small buildings, commercial townhouses, and things like that, and graduated up slowly but surely. But the good thing about New York is that we have an as of right zoning jurisdiction. So every parcel has a lot of things that you already know about it. You don't have
Mm,
to go through an entitlement process. Zoning tells you what type of building you can have, tells you how big the building can be, tells you what shape the building can have. Our zoning resolution is very, very complicated. And even people who do nothing but study the zoning all the time constantly have to look things up to figure it out. But it is an as of right jurisdiction. So it's just a matter of knowing where to find the right answer. But the answer is out there.
yeah, and it at least gives you a parameters to go by. And then for you, of course, at this stage, you're probably dealing with all developers and people that you know. But for somebody new coming into an area like New York City, probably tough to get in, but also a little bit better that there's at least this pocket of regulations that says, this size, this shape, like you said, giving them a little bit of guidance.
Yeah, well, when we started out, and I started in 1984, my partner Paul Massey and I each took very, very small territories, we called them. And initially we were going to work the whole Upper East Side from 55th Street all the way up to 96th Street. And as we were going through the cataloging process of taking photos of every building and finding out who owned every building, we realized that even just focusing on one neighborhood was too expansive. So initially, we worked from 55th Street to 63rd Street. Paul took Fifth Avenue to Lexington. I was Lexington to First. And by focusing on one little area, you really got to know it really well. I mean, there are 176,000 investment properties in New York City. So way too big for any one person to know everything about all of them.
Yeah.
But if you focus on one small area and become an expert, you can then use that as a base and grow from there.
Yeah, and don't you think that strategy is still applicable, even given that there's obviously much more extreme technology now and people can kind of look stuff up? I still personally think all the ways that I used to invest as a kid, knocking on doors, going through, like you said, smaller networks to find it, I think it's still viable today. I think people are just encouraged not to do it because it seems easier to not do it.
Yeah, no, I think, studying your market and being a market expert is so important. I always say are three characteristics that I see in all of the top real estate brokers that I've seen work and I've worked with over the years. One is a tremendous passion and love for the business. You have to have that because most people get out of the business when things get tough.
Yeah.
If you love it enough, you'll stick through those tough times and stick around for the times that will get better.
Yeah.
Two is the ability to use discipline very well, and I say use discipline as opposed to have discipline because we all have access to the same amount of discipline. We just choose to use it differently. And in our business, you have to do some very boring, mundane things over and over and over and over again. So that discipline helps you do that.
Yeah.
And then the third thing gets back to what we were talking about, which is market expertise. They're an expert at one thin slice of the market that's small enough that they can know everything about it, but big enough you can make a good living doing it. And, if you have those three characteristics, then, success is right around the corner.
Yeah, I agree with all of those. I think that market expertise shows off. And I think that even people who are a little bit newer, if they just study, as we were saying, as you said before, just a smaller area and they become an expert in just that small area, then at least they have a competitive advantage in that little part of blocks like you guys did, splitting it up and say, we can only go for these 9 blocks, but we'll do the avenues and see what we can get.
Right.
How much has changed for you with technology? Because, I grew up with a dad who was just dragging me to yard sales. We're making offers on homes. We're going to the actual getting the papers from the courthouse. There was no internet. Has it changed a lot for you? Because it still seems like you operate the way that you always did. And obviously it's still working.
Technology has changed dramatically. I'll take you back to me sitting at my desk in 1984. No cell phone, no fax machine, no computer on your desk. We carried rolls of quarters around in our pocket to make phone calls from the payphone at the corner. You think about how technology has changed everything so much. I mean, that being said, I think the business is still fundamentally the same exact business it always has been.
Yeah.
But the tools are very, very different today. And some of the strategies are a little different. Tactics are different. But technology really has changed things tremendously. And we actually, although, my map room is very, very analog and a lot of my data sets are very, very analog, we use AI in a huge way. And, we're running all of our data sets through proprietary AI models that we've created. And it's really amazing what AI can do. It's changing the world. And I think, I talked about sitting at your desk, not having a computer, a cell phone, a fax machine, how the world has changed. I think that the world is going to change to an even greater degree over the next 5 years than it has over the last 40, because AI is moving so quickly. It's remarkable. We will use a new tool and we say, wow, this is the greatest thing ever. Look at what we can do. And 2 months later, something newer, bigger, faster, broader, more powerful comes out. And the thing that came out 2 months ago that you thought was so great is a dinosaur already. So really remarkable what's happening in the technology side of the business.
Yeah, and I've found that the good thing about AI, especially for what we do, is the more that we know and the more that we put in, if you're using data that you already have proprietary data, it's just going to build off that. So someone can ask it a lot of questions and it will get somewhere and feed a lot of information. But the more you know, you actually end up creating much better data sets for yourself because you can give it feedback and then, somehow it miraculously figures out exactly where you're going.
Yep. Yes, indeed.
Yeah. So in terms of your overall scale development, what percentage are residential developments versus commercial? I mean, New York City is kind of a different beast than a lot of areas, but do you have any specific types that you've really enjoyed developing or that you find a better option, at least now in New York City?
Well, just to give you a sense of my practice, for the first 40 years of my career, I was a generalist, selling all types of properties within a geographic focus. And I think that because of the way things have changed relative to the availability of public data,
Hmm.
that geographic specialization is not nearly as powerful as product specialization
Hmm.
is. So today, my new firm, BKREA, is coming up on 2 years old. And we focus very, very narrowly. We basically deal with vacant buildings in New York City. What do you do with a vacant building in New York City? You knock it down and build something new. You renovate the heck out of it and change the use from one use to a higher and better use,
Yeah.
or you sell it to a user that's going to buy it and occupy it for their own business. And so we stick very closely to those on the land and development side, just based on the type of zoning that primarily exists in New York, and the nature of the fact that a developer who's building condos can pay more for land than
Yeah.
Somebody who's building rental. The overwhelming majority of the land deals that we do in New York City are for condo construction.
Yeah.
Uh,
Are you seeing a lot of office changing to residential? Because that's such a hard change. It's almost maybe more cost effective to do a knockdown, but it depends how many floors, just because you're not set up with plumbing and electric for a normal residential.
Yeah, well, I had a great in-depth conversation with Nathan Berman several months ago. Nathan is probably the number one converter of office to residential buildings in New York. And, you read these reports from architects saying, 16% of buildings can be converted, or, 22% of buildings can be
Yeah.
converted. And Nathan is very, very clear. 100% of buildings can be converted. It's just a question of what the cost is and how the units are going to lay out.
Yeah.
But the thing that really is fueling the whole conversion market from office to resi is the very, very compelling 467M tax abatement program that we have. It basically gives you a 100% refund of your real estate taxes during the construction period up to 30 months. And then you get a 90% reduction in your real estate taxes for 35 years.
Wow. 35. Yeah.
Based on how compelling that tax abatement is, there are currently 84 buildings in New York being converted from office to resi, and that's about 25.7 million square feet. So that alone has taken a big chunk out of the nearly 100 million feet of vacant office that we had
Yeah.
in New York. And now through these conversions and through positive absorption that we've had for the last couple of years, we're down to under 60 million square feet of vacant office. So the market has tightened up very considerably.
Yeah, that just seems like a smart idea overall for the city to be able to give the opportunity to recapitalize that, because not all cities are doing it, and there's just a lot of vacant office space still out there.
Yeah, I mean, with 100 million feet vacant, I mean, there are only 6 cities in the United States that even have 100 million feet.
Right.
And we had 100 million feet vacant, and we desperately need housing. And as part of this, there is a component of these conversions that needs to be affordable. So, it's solving two problems. It's reducing the overhang of vacant office we have, and it's providing the much needed housing that we need. And even with all of that change, all of that conversion going on, we're still desperately in need of more housing. So it's helping, but not solving the issue.
Yeah. Yeah. I mean, New York City, I think from the outside, people think it's, a city where everything magically can happen, but it's a very complicated market for real estate. You obviously had to learn a lot to go through it over these years, and I'm sure things are still changing every day. Do you find that it's just a market that you have to know better than everybody else?
Legislation changes. I think that as I've seen things change and evolve over my 42 years, I don't think there's ever been a time where public policy and the performance of the real estate markets have been more highly correlated.
Yeah.
And so you have to stay on top of these things. What are legislators proposing? What are they voting on? What's been adopted recently? What has changed? And, I think with the City of Yes changes in New York, and a number of the rezonings that have happened, and new legislation that a few years ago, everything changed. And so I basically was starting my career all over again. I happened to be able to benefit from a long track record behind me, but basically starting over, learning all these new programs. And, we have a new tax abatement program for new construction called 485X. We have the 467M abatement for conversion of non-residential buildings to residential. We have a new affordable housing program called UAP. We have the Midtown South rezoning. We have rezoning in the Bronx. We have rezonings all over the city. So there's so many new things to learn and stay on top of all the time. But you have to know these things because they really can help you make deals, and you waste a lot less time by virtue of knowing something ahead of time.
Yeah, because I mean, you can't give proper advice to a developer if you don't know the exact results that are coming, or maybe what the legislation looks like around the curve, which of course can change a lot, to see, well, we don't know, but legislation's not looking good for this type of project. Hey, it's Jonathan. I hope you're enjoying this episode with Bob Knakal. And if you want to see more of his content, he's pretty easy to find online, but you can start at bobknakal.com. And that's obviously Bob, and then KNAKAL.com. You can find his company at BKREA.com. There's a ton of information. You can go down the YouTube rabbit hole. You're going to learn a lot just from this episode and from following him anywhere you can. Let's get back to Bob. Before, you gave us 3 characteristics of great brokers, but I wonder if you could give us, if all your experience with developers over the years, what are the top 3 characteristics you see from the developers who continue to be successful in a difficult market?
Yeah, well, I think the number one characteristic I see in top developers is optimism. I think real estate developers have optimism injected into their DNA when they're born. They always are looking at the bright side. Because think about it, a developer is basically placing a bet today on what market conditions are going to be like 3 or 4 years from today, when what they built will be ready for occupancy, and either renting office space, renting hotel rooms, renting apartments, or selling apartments, or you have to make a bet on where you think the market's going to be years ahead. I think the developers who understand zoning are ahead. Those that are optimistic are ahead. Those that have access to raising capital come out ahead. But there's nothing better for a developer than to have just concluded a successful project, because then every broker in town will be offering them every site that's around. So I think it's a combination of all those things.
Yeah, it's good to hear optimism, because I think, there's for smaller investors, optimism can almost be a mistake, because they're kind of miscalculating what they want in terms of like financial optimism, on a small scale. But these are developers who are building and hopefully have prior projects that have given them a proof of concept to understand that they can accomplish. But as you said, you still are throwing it out 4 years to see if it's going to match, and is what you're building, is anybody else building it? That's really important in the city as well, to see what type of competition has just been built and what's also in the pipeline, right?
Yeah, well, that's one of the things that's great about our Knakal map room, is that you can look at the map and you see not only what is being developed, but what has been demolished and getting ready to be developed, what has been purchased and will start to be demolished in a year or so, and what other sites even exist that may not be for sale now. But you get a really great and very clear picture of what your competitive set looks like. And that actually is very helpful for us also when we're doing evaluation on a site. We know that the savvy developers are going to take into consideration all these things. Yeah. And we want to know, as we're preparing the owner for what they can anticipate to get in terms of a price, we want to know what that competitive set looks like so we can guide them appropriately.
Yeah, and because you have so many building sales and the map room, you're able probably to generate a very good estimate of what this is going to look like and what else is out there, so that they can have a much more confident view in terms of what they're going to expend. Experience obviously helps along the way in this context, because you want to make sure when you're making these large scale investments over time, you're going to do well.
Yeah, no doubt about it. And like another resource we have that's been very helpful for our clients is we created what we call the NACA Land Index. I've been tracking the market very fastidiously since I got into the business. So we have a data set of land sales for Manhattan going back to 1984, over 2,444 land sales, and we've disaggregated them into 5 buckets: residential rental, residential condo, hotel, office, and then a miscellaneous bucket. And we've looked at those fluctuations in land value, compared them to a whole bunch of macroeconomic factors like interest rates, inflation, lending rates, S&P 500, Dow Jones Industrial Average, price of gold, price of oil, a number of things to try to see what factor or combination of factors are predictive of swings in value.
Yeah.
And so when we look at all of these things, there's been some really fascinating things that have come out. We put all this data into our AI models. And, we know, for instance, if you have a development site on the corner versus a mid-block site, you're going to get a 24.4% premium in pricing. And we have 200 of those nuggets that have come out of this analysis that was done using AI for this extraordinarily robust data set that we have. And so those insights are things that help us not only understand what a site's value is likely to be, but also we can explain to our clients why we think the value is what it is. And it's tough to poke holes when you have, I think there are over 26 million data points within our data set. And we've, diced and sliced all of that info. It's tough to argue with it.
Yeah, and I mean, that's obviously one thing, talking about AI and being able to feed it data. That's one thing where I think technology has drastically helped commercial, because you can create the pro formas and all of the kind of scale of what you can make much quicker than we used to do on just a piece of graph paper. I remember my dad, when I was collecting rent for my dad, they were just on a scratch pad, like that we were just crossing it off and checking it out. But I still think it's smart to marry this new version of AI to these old school techniques of building relationships and making sure, the map room, and then you can put the data in. But it has to help in terms of the quick formulation of data sets for what things are going to cost.
Without a doubt, AI is so incredibly powerful. It can do millions of calculations a second. But in order to get good results out of it, you have to put good data into it.
Yeah, absolutely. Is there a part of New York City right now that you feel has the kind of biggest scale for developers to do well on? I mean, it's a huge city. All of the parts. Is there any part that is kind of ripe for more active development?
Well, I think the areas that have been rezoned, certainly Midtown South, which is the Garment Center, is an area where there's tremendous development going on. The Long Island City rezoning that recently went into effect is having a big positive impact on the market. There are 4 pockets along metros in the Bronx that were rezoned that are producing very good results. And so, rezoning has a lot to do with it. You look at areas that are near public transportation, those areas are always very positive because the city increasingly, and they've been doing it for decades, but the city increasingly has to increase buildable density around transportation and decrease buildable density far away from transportation to make the city work more properly. So, lots of things like that we look at to try to determine what the next great markets are going to be.
When you say rezoning, for the listeners, is that mostly just playing in favor of more residential opportunity?
Yeah, that's either taking areas that were historically commercial
Yeah.
and allowing residential as of right without having to go through a rezoning process, or maybe increasing the density. Like one of the big advantages of the Midtown South rezoning was that when I talk about density in New York City zoning, there's something called floor to area ratio, or FAR we call it. And the FAR tells you for every square foot of land you have, how many square feet of building you can have. And in New York City, those FARs range from a low of 0.25 up to 33. Like in Hudson Yards, there are a lot of districts that have a 33 FAR zoning.
Yeah.
But typical zoning is about 10 for the avenues and about 4 or 6 for the mid blocks. And in the Midtown South rezoning district, they changed the density from 10 to 18. And in areas where you had only commercial zoning, they are now allowing residential. So there's tremendous amount of activity happening in that area. And I always say that so much is dependent upon what public policy is.
Yeah.
And our policymakers, unfortunately, don't understand the ramifications of a lot of what they do. But when they get it right, it can have a tremendous impact on behavior within the private sector.
Yeah. I'm just curious because a lot of what we're talking about is obviously adding more housing and residential. But how do you feel office looks like now in New York City? Obviously, you had a lot of vacant opportunities that are getting redeveloped. But is office still something that can produce in New York City over time? I mean, I know some companies, COVID, everybody went home, then they want to come back to work. But there was so much commercial office space. Is it still viable on the large scale to develop it?
Yeah, I think it absolutely is viable. And I think that for as much as um, the office market was getting slammed by critics, I think you have to remember that that market segment basically functioned as two separate markets. You had the new construction Class A stuff
Yeah.
that always had strong demand. There's tenant demand for new, no matter what it is. People want new offices, new
Yeah.
hotels, new apartments. They want new. So new office buildings in the city have always done well. Tremendous demand from tenants, very high rents, well into the triple digits. So those buildings were doing well, and we've seen a turnaround in the B and C office sector. B and C office buildings were the type of buildings that were most negatively impacted by the big vacancy we had.
Yeah.
Vacancy climbed over 30% in those buildings. But what we're seeing is that, and the value in those buildings took such a hit. Buildings that we sold for $800, $900 a square foot were selling down in the high 100s per foot. And for a while it got down into 300s. You said, "Oh my gosh, can it get any lower?" And then every time we thought the market had bottomed out, the next week there was another transaction at an even lower price per
Yeah.
square foot, and got down into the high 100s. That market is coming back. Leasing activities picking up. You certainly can't find anything in the hundreds anymore. Nothing in the 200s. Getting tougher to find something in the 300s. But that market is definitely on the way back.
Yeah. And does the qualification of I think A always wins, obviously, in residential as well. But what about in terms of residential? Are there even like in other areas, obviously, no one's building really B and C. It just doesn't make any sense. But New York City needs so much. Is B or C kind of being redeveloped? Or is there any type of new development ground up for obviously more affordable?
Yeah, well, we need a tremendous amount of housing. Vacancy is 1.4% in New York, and the reason that rents are so high is twofold. One, there were tremendous protections put in 2019 when the rent laws change very much in the tenant's favor. That has done two things. It's stifled rent growth in stabilized buildings. It also has forced owners to keep, estimates are somewhere between 60 and 80,000 apartments empty because it doesn't make sense to renovate
Wow.
and rent them. And at the same time, there's been very, very little new construction. The 485X tax abatement has very, very high wages associated with it. If you build anything over 100 apartments, you have to pay pretty substantial wages to the workers. And because of that, I think every building permit that's been issued since 485X went into effect has been for a building under 100 units. And even larger sites, developers are chopping up into multiple 99 unit buildings so they can avoid paying the wages. So because of that, rents in free market buildings are going through the roof. I mean, $130, $150 a foot for residential rents is just absolutely crazy.
Yeah, can we just go back? You said 60 to 80,000 units left vacant, and that's because the cost to renovate wouldn't make sense because they're rent controlled?
Well, they're rent stabilized.
Yeah, stabilized, yeah.
Used to be, and I'll get on my soapbox a little bit, but to show how silly legislation is. In 1978, there was a 14% dilapidation rate in housing in New York. Dilapidation meant that the unit was considered to be in such bad condition that it was deemed uninhabitable. 14% of over 3 million apartments in terrible, terrible shape. So the city implemented two programs that incentivized the private sector to invest in the housing stock. One was called the Major Capital Improvement Program, or MCI. The other was the Individual Apartment Improvement Program, called IAI. And the MCI program said if you do building-wide improvements, such as a new roof, new boiler, new windows, new electric, new plumbing, you could pass along to an increase in your stabilized rents and get a 30% return on invested capital. Similarly, the IAI program said, hey, you renovate the apartment, put in a new kitchen, new bathroom, new flooring, new fixtures. You could pass along 30% of those improvements in increased rents. And so you had the private sector, because of those incentives, dump tens of billions of dollars into the housing stock, such that in 2019, the dilapidation rate had fallen to 0.04%.
Wow.
And in 2019, HSTPA, the Housing Stability and Tenant Protection Act, basically marginalized both of those programs such that there's not an incentive to invest in the housing stock anymore. You have, an apartment used to be rent for $700 a month. You'd renovate it and you could charge $4,000 a month.
Right.
And so you did that. You put in $100,000, $150,000 to renovate the apartment. But now, if you put that $100,000, $150,000 in, you get a $120 increase. So you take your rent from $700 a month rather than going to $4,000, you get $823 a month. Nobody's going to do that.
Yeah.
So when these stabilized units become vacant, the owner just nails the door shut and is waiting for a better day.
So but don't you like the national news or national, I guess, tenor would always kind of try to put that on the landlord. Oh, these are landlords, slumlords. They don't want to have good housing. But the legislation actually made it impossible. The only way to do it would be to lose enormous amounts of money to renovate it and get no benefit.
Yeah, people don't invest if you don't have a good return. Would you buy a stock if your return was 3 cents a year?
Right.
You pay $100 for a stock, you got a 3-cent return every year. No rational person would do that.
Yeah.
So you have to create the right incentives. You look 467M tax abatement. It's compelling. People are taking advantage of it. You have something that's not compelling, people don't take advantage of it. You have to use common sense. And I think most of the time the problem is that our legislators really don't understand the issues. They don't take the time to figure out how things are going to impact the behavior of people in the marketplace.
Yeah. I mean, I think that's all across real estate as a whole. If you look at what somebody's trying to do in theory doesn't mean that that's how it works on the ground. And I don't think that the people on the ground, like you, have been doing the work for all those years, are allowed enough input to tell them, actually, this isn't going to work. At this point, you probably know exactly what's going to work and at least know what will make the developers get these units back online. But if it doesn't line up with the legislation, just from what you said, I can't blame those people. Why would you want to just throw money away, to do it? It just doesn't make sense.
Right.
Yeah, it must be interesting to see how everything changes year to year, and then to figure out like where the new pockets of good development are. That's what keeps it fun, right? I mean, there's always something new, even if it's maybe not, what you wanted. You're just going to adapt to it and figure out what your clients want.
Yeah, without a doubt.
Yeah. What do you think's coming over the next couple of years, especially for New York City real estate? Do you see any trends that are trending up that might change what people think about New York City development?
Yeah, well, Jonathan, I'm very, very bullish about the future of New York. I always say, even the worst of times during COVID and the couple of years after that, I said, you know what, don't ever bet against New York.
Yeah.
You look at the way the B and C office sector is coming back. It's remarkable. You look at some of the things that's happening with tenant demand and tenants growing and new buildings being built. A lot of great things happening out there. And we've been in a relatively lackluster market for years. Last year, our turnover rate, I think there were 891 buildings sold in Manhattan, south of 96th Street last year. That's a 2.5% turnover rate of the 27,649 investment properties that exist south of 96th Street. That's the seventh year in a row that we were at or below trend. That has never happened before. Even during the S&L crisis in the early 90s, we're only 6 years below trend. So I think there is tremendous pent-up demand to sell buildings. And I think that there is going to be much more volume. I think values are going to get better, and things are going to be very, very robust moving forward.
Yeah, just for listeners who, maybe they've been in real estate for a while, they want to get into development. What tips would you have based on all of your experience? If you want to get into development, whether it be New York City or somewhere else, what do you need to start with to make sure that you're setting the right foundation? Because you just don't go into large scale development. Obviously, it might be better to start a little smaller, see how it works.
Yeah, I suggest everybody, I've seen new developers come into the market, whether they're from overseas or from around the country, haven't done anything here yet. And the majority of those first-time developments usually don't go so well.
Yeah.
And so I think you have to understand the market, put a good team together. In New York, you need zoning people, you need a good attorney, you need good brokers to advise you on what your end product is going to be, whether it's condo or rental or office. You need to consult with people who could really give you good insight into the market. But like anything, our business is very information centric, and the better the quality of the information, the better decisions you can make.
Yeah, absolutely. Well, I really appreciate the time. It's just like talking to a human computer with your knowledge of New York City commercial real estate. Yeah, it's been a pleasure to get your information, talk to you. I really appreciate it.
Well, Jonathan, great chatting with you. And if anybody out there would like to chat, I'd love to hear from you. You could always get in touch with me by email at bk@bkrea.com, or follow me on social media. I'm on all the major platforms. Or you call me on my cell at 917-509-9501. I'd love to hear from you.
And the best places are BKREA, BKREA.com, and bobknakal.com.
Yep, absolutely. Those are my two websites.
All right. And Knakal is Knakal, just for the listeners. Thanks, Bob. Really appreciate it.
Jonathan, great to be with you today.
Yeah. All right. That was Bob Knakal, a legend in the New York City commercial real estate game. I'm Jonathan Greene. We'll see you next episode. Thanks for sticking around to the end so you can get a preview of who's coming up on episode 334 of Zen and the Art of Real Estate Investing. And we're keeping it going with this every week, one solo episode, as I'm coming in hot again with how to tell the difference between a guru and a mentor. I think this is really important at this time where there's so much social media and advertisements blasting at you all the time. This is a deep dive into what signs you can look for to tell if someone's a guru and a mentor, but it also talks about one thing that I believe that a lot of errors in this space are user errors. So it's not just the gurus and mentors who are out there just doing things for bad. There's plenty of people who make decisions for the wrong reasons and get caught up in something that they didn't want to do any work to get. Can't wait for you to hear the show. See you then.